What's next? Sectors set to soar in late 2025 and beyond. As we enter the second half of 2025, investors are facing a very different landscape than just a year ago. Inflation is cooling, interest rates, once the biggest headwind to the markets, are stabilizing, and central banks around the world are signaling a possible shift. Rate hikes are likely behind us. In fact, many expect the Federal Reserve and the European Central Bank to start cutting rates before year ends. For retail investors, this matters. Opportunities reappear, but the key is knowing where to look. So today, let's break down 6 sectors and explore which ones are positioned to lead in late 2025 and beyond. Let's start with energy. After a strong performance earlier in the decade, the energy sector has been quieter, but oil prices are still elevated, thanks to tight supply and steady global demand. OPEC is keeping production limited, and geopolitical risks haven't gone away yet. At the same time, traditional oil and gas companies are generating strong cash flow, and with interest rates easing, their financing costs are coming down too. That means they can invest again. For retail investors, this makes energy a solid income-generating play in a world that still runs on oil. On the flip side, clean energy continues to benefit from government support, but financing delays and high project costs remain a challenge. If interest rates drop significantly, we could see renewable energy projects pick up again, but for now, traditional energy looks more immediately attractive. Next, tech and AI, the market's darlings. Tech stocks have rebounded powerfully on expectations of lower rates. And AI, it's everywhere, from cloud computing to productivity tools to chip makers powering the AI revolution. But here's the thing, the easy gains may already be behind us, at least for the biggest names. Valuations are sky high, so yes, tech and AI remain a keep-going sector. Retail investors should be more selective, look for strong balance sheets, positive cash flow, and a clear AI strategy that's delivering results, not just headlines. What about EVs? Electric vehicles are no longer new, but the market is evolving. In places like China and Europe, growth is slowing, not collapsing. In the US, sales have plateaued as consumers wait rising prices, limited infrastructure, and policy uncertainty. But here's the long-term truth. The transition to electric is still underway. The winners now are likely to be companies focused on battery innovation, infrastructure development, and cost efficiency, not necessarily those just rolling out flashy new models. In the short term, EV stocks may remain volatile, but for long-term investors, this could be a great time to build a watch list and identify players with real technology, supply chain strength, and government tailwinds. Now let's talk about healthcare. This is the sleeper pick of 2025. After lagging the market during the big tech rally, healthcare is starting to shine again. Why? Because inflation is easing, which reduces cost pressure on hospitals and pharma companies. And with interest rates falling, big players can fund R&D and acquisitions more affordably. But the real driver here? Innovation. We're entering a golden age of biotech and med. Investors are also seeing more M&A activity as larger firms snap up smaller biotech innovators. So, healthcare, especially biotech and health tech, is positioned as both a defensive play and a growth story. It's worth keeping a close eye on. Finally, real estate. This sector has taken some serious hits. High interest rates made mortgages more expensive and commercial property values dropped sharply. But now, the tide may be turning. If central banks do begin to cut rates in the coming months, real estate financing gets cheaper. That's good news for housing markets, real estate investment trusts, and even some segments of commercial real estate. So in real estate, selectivity is key. Look for segments with long-term demand drives. Affordable housing, industrial properties, and infrastructure-linked assets. So where does that leave us? If you're a retail investor heading into second half of 2025, here's the big picture. Tech and AI still lead, but fundamentals matter more than hype. Energy and healthcare are solid defensive sectors with strong tailwinds. EVs and real estate have long-term potential but require patience and careful selection. And above all, remember this. When financial conditions shift, so do markets. We're entering a new phase, one where opportunity is returning, but not everywhere, and not all at once. Watch the central banks, track inflation, stay diversified, and look beyond headlines to real fundamentals. That's how you stay ahead in 2025 and beyond.